Good afternoon, everyone, and welcome to Stock Market Today by Investors Business Daily. It's November 19th, 2021, and I'm Justin Nielsen, joined by Ed Carson. We're going to be taking over the show while Allie is on vacation. So today, kind of a mixed bag, strong action on the NASDAQ Composite, NASDAQ 100, not so much on the S&P 500, Dow Jones Industrial, and Russell 2000. We'll get to the market action. And also, we'll talk about a few stocks like Airbnb, what's going on with the coronavirus, and what does that say about the reopening plays? Also, DoorDash kind of round tripping, and some things setting up like Louisiana Pacific. So, Ed, let's go ahead and get right into it. The NASDAQ Composite was up about 0.4%. The NASDAQ 100 up over 0.5%. But meanwhile, the S&P 500 down about 0.1%. The Dow Jones Industrial Average down almost 0.8%, and the Russell 2000, the small caps, again lagging, down about 0.9 today. So, what is your take? It's hard to kind of judge the strength of the market on your portfolio because it really depends on what you own, right?
Yeah, it really depends on what you own, and the market's sending mixed signals. On the one hand, the NASDAQ and especially the NASDAQ 100 is looking extended. It's like looking too hot, and
Right.
other things are looking too cold. It's a weird situation. So what does that tell you? I mean, the snares aren't that necessarily positive because you don't want the market to weaken, but you also don't want the NASDAQ to get much stronger, because if you look at the NASDAQ, it's about maybe just a little under 6% extended from the 50-day lines. I guess we would say that's not extended. But the NASDAQ
Getting there.
getting there, and
Right.
the NASDAQ 100, which obviously has been powered by a few handful of names, the Apple, Amazon, Tesla,
The trillion-dollar club.
Nvidia, and Microsoft just keeps on, Microsoft keeps chugging along. They're all moving very nicely, and that one really, they both did well all week, but this one's getting quite a bit up there. It's over 7% above the 50-day line. When you get 6 or 7% above the 50-day line, the risks of a pullback are just growing. It's not a guarantee that'll happen right away. In September of 2020, we actually got like over 11%, I think, over the 50-day line on the NASDAQ before finally then falling off. But that wasn't a great, we had a pretty nasty sell-off and a correction and choppy market. So it's just sort of weird when you look at that. And then, the divergence is strange. The divergent market wasn't much fun earlier in the year. I'm sure it's probably not going to be too much fun right now either.
Yeah, and especially in contrast to how it was earlier this month, where it just seemed like all the indexes were finally rowing in the same direction. You had the Dow, the Russell. The Russell was actually starting to lead a little bit. It was having even bigger moves. A lot of times we look at the IWM, the iShares Russell 2000 ETF that kind of tracks that. But that one has fallen. And while the S&P 500 and the NASDAQ have kind of roared back to the highs. I mean, the pullback wasn't that big, but they got right back to new highs very quickly. The Russell 2000 here and the Dow Jones Industrial Average have both started falling a little bit. Again, speaking to that little divergence that's happening where the Russell 2000, its main components by sector are healthcare, financial, industrials, and look, that's not where Tesla and Nvidia are, right? Those leaders.
And I was looking at advanced decline. They were down 2-1, I think, on the NASDAQ yesterday.
Yeah, yesterday, right.
And I think today was something similar to that as well. I'm not sure. It's like, so even though the NASDAQ's up, there's a lot of losers. So even in the NASDAQ, there's a lot of losers, right. Especially out of the tech titans and some chips. There's weakness there. Really, it's sort of like you could have this Goldilocks. If you mix everything together, it looks like the S&P 500, and that looks okay. That's right. Near highs, but it's not extended, even from the S&P's perspective. We start getting worried at 5 to 6%, but it's only 4.2. So if you could just, maybe in a dream scenario, the tech titans go sideways for a while or pull back a little bit, and then everything else comes up a little bit, and we get into the sort of S&P type of mode. But to me, the other two scenarios are the tech titans keep on moving higher, and then you really have to have a pullback, and or the weaker sectors like the Dow or the IWM or some of these other individual sectors, they come down and pull everything down. I don't like either one of those scenarios. but those are quite possible going forward.
Or it could be, like what we've seen a lot this year is that sector rotation, where all of a sudden, what was hot starts kind of falling, and the things that we're pulling back and not participating, those are the things that start working. So maybe to that end, why don't we take a look at some of the ETFs that you're tracking to kind of get a gauge on where the strength is or isn't, and where the setups might be.
Yeah, the FFTY, which is tracking the Innovator IBD 50, it's like, similar to our IBD 50 index, you're definitely using off of that. It was down a little bit today, which is okay. But it was down this week, down 1%. And that's after being down last week. And again, not the worst thing in the world, but it just shows you that growth overall wasn't really going, despite the NASDAQ having a really good week. Again, that divergence in that regard.
And part of what's happening here is, that the weights in FFTY, you're not getting the big weights where 5 stocks are going to be, accounting for 25% or more of the move in the index. So, here it's, a lot less muted in terms of the weights, how heavy it gets. 3.5% is kind of the starting heavyweight for this index.
Yeah, it does have NVIDIA, it does have Tesla, and there were some other good winners, but there was also a lot of losers in there. So it was definitely a mixed bag. I think another one is software was also weak, and that's with Microsoft. That's with Adobe. And some others, that some of the giants were doing quite well.
That are big weights in this index.
And big weights in this index. And so IGV, not bad, nothing bad, but again, it wasn't leading. It was just pulling back a little bit. I don't want to make anything, boo-hoo, 0.8, but
but still strange to see when the NASDAQ 100 is like, it was up 1% yesterday. So, that kind of strength. What else? What about semiconductors?
Semiconductors obviously are on fire. NASDAQ, NVIDIA, AMD is doing well. Taiwan Semi is coming on. Some of the chip equipment makers didn't have a good day today, but when NVIDIA is racing up like that, it doesn't really matter. Especially with some of the other chip makers.
Financials, this is an area that, we were looking at for a while, because it looked like there were setups here, and it looked like there was that strength. And again, that was at the time that the Russell 2000 was moving a lot more. Plus, we were seeing the 10-year Treasury yield, starting to spike up to over 1.6. But lately, it seems like that's been under pressure a little bit. Still holding above the 50-day moving average line for the XLF, which is the Spider Sector Fund for financials. Or I guess it lost it at the end of the day. It just lost it. Yeah. So is that saying anything about the strength, or is this possibly that potential for rotation here?
Some of this, there's some weakness in Visa and MasterCard, some specific things. Some of the payment stocks were separate from interest rates. But also, it's not just, the COVID, just to bring it up, one of the negative factors today for a lot of the market, less so for the tech titans, was that COVID concerns, is that Austria announced a lockdown.
Right.
There are a lot of cases in Europe, and the cases are picking back up in the US. So that's hitting a lot of sectors. It's not just the yields came down, but now you have to start thinking, well, maybe economic growth will be weaker. And that's basically banks. Financials are economic growth and maybe also interest rates, depending on the sector. And those were not working well. And so again, this was a whole sector is down. This is when you know why the Dow is down. Well, it's this. Another reason would be XLE.
A lot of the oil stocks.
It fell for a 4th straight week. Oil did, to a 7-week low. Oil was going up, 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 up. And, today I fell more than 3%, a really sharp drop in oil. And, it doesn't matter how good the stock looks. If the underlying commodity is down like this, it's going to take a tumble. The actual oil, and that's what happened to these stocks. And Boeing also took a tumble today, so the Dow got hit on a lot of sides, and obviously that's its travel plays as well.
Yeah. Well, getting back to your point of COVID, so Austria has its lockdown. One of the stocks that we certainly saw take a hit because of that was Airbnb, ticker symbol ABNB. Now, this is one that had, such a strong gap up after the earnings. It was already, looking like a good setup. It had been moving up off its bottom. A little bit of volatility here. So this is just another kind of piece of the puzzle here with Austria. What does that do for, and as you mentioned, the cases kind of spiking in a lot of places, not the deaths so much, but there is that concern of cases spiking. So what is your take on Airbnb right now?
Yeah, it's a little volatile in that handle. I mean, the plus side, there was some blue bars in there in the middle of it showing some support. And today it did get support on the 21-day line. So that was positive. But yeah, I mean, one of the nice things about it is that when this broke out, there was a lot of other travel stocks that are moving
Right.
really well. And then Airbnb held up, in a volatile fashion, but held up. But some of the other names came down quite a bit, probably as some of these COVID concerns started to percolate a little bit more. And I tried to break out earlier this week. That came down, but yeah, it's a strange situation. It's a little it's so I don't like the volatility in it. I don't like how some of the other travel plays are struggling. I mean, suggesting that there's weakness there. There's a lot to like about it, as you're saying, because it was a really strong move. The growth was tremendous in the latest quarter. That people are expecting profitability next year.
Mhm.
But it's a tricky business, giving up a lot of the recent gains in the past couple of
Right.
days.
And this is one that we had on leaderboard previously. We were looking to add to the position right
Mm-hmm.
before earnings, but that's not something we're comfortable doing without, right on the day before earnings. So we ended up doing an option play that actually expired today, that option. So we exercised it. So we added to our position in that way. We had a 180 strike on it. We paid 580 for it. So we had a lot of profit on that. But our goal was to take the shares in that case, from that call option rather than trading the option itself. But you also mentioned how some of the other travel stocks, we might as well take a look at Hilton. HLT is the ticker symbol on that. That was one that was kind of just coming down here as Airbnb was, coming back to its highs. This was kind of coming down steadily, but quite the reversal on this today, right at the 50-day moving average line.
Yeah, that was pretty scary. And like if you had bought it out the breakout, would have been a round trip and you would have wanted to get out. But sometimes you literally can have a sell signal and a buy signal on the same day almost. Because
Yeah,
I mean, that can happen
just
because it's
depends on what time you're looking at it, right?
time you're looking at it. So I mean, I know that you added on Swing Trader, I think on this day, it
Yeah.
didn't look so good, but then it bounced back. I mean, you certainly could make a scenario. I mean, Pfizer and Moderna, they're expanding out the booster shots almost at any moment. We'll get the final approval that you can get it a booster shot in the U.S. for the Pfizer Moderna. So that might help reduce cases and definitely reduce any concerns about hospitalizations and deaths as we go deep into the holiday season. This is nice, but it's so you could certainly see that tailwind coming back. But that's sort of like the market. The travel sector is like a lot of the market has these headwinds turn into tailwinds, turn into headwinds, and so
Right.
it's you get whiplash, and so it's hard to play it. I mean, it would have been hard, it's that this is a difficult thing to play because it wasn't like the news really changed during the day, but boy, did that stock change during the day.
Yeah, absolutely. So speaking of kind of a little bit of the whiplash, DoorDash, ticker symbol DASH. This is one where it's like they, delivered the food for you and then they took it right back. So DoorDash had this nice breakout. We noted that as it broke out, it kind of had that squat, which didn't
Mm-hmm.
necessarily disqualify it. It did come back. Lots of volume on the upside, everything looking rosy, but not so much now. This is a pullback below the pivot, and even though volume wasn't too heavy, what's your take on it now?
Well, I mean, now it's round tripped. I mean, pretty much on anything, whether you use the official buy point, whether you use 220.71, or even if you do some trend line, it essentially round tripped like a 10 plus gain, 10%, 10 plus percent gain. You don't want to do that. You don't want ever want to see that happen. You want to make sure that you get out before then. I think, at the top here, like look at this day. I mean, it closed, well, on this day, it was 18% above the 10-day line. And
Mm-hmm.
so at the high, almost certainly the next day it was above that. It reversed lower. My feeling in general in this kind of crazy market, when you get 20% above, I know with a breakout it's a little different, but you could have understood taking profits a little bit, just a little bit here, just to try to make sure to lock in some gains. That's definitely an interpretation thing. I totally understand why early in a breakout, why you'd say, no, there's no reason to. But as it came down further, at some point you need to take at least some partial profits so you can try to get out with some sort of a gain in this scenario. It's unfortunate how this reacted because it did look really good. There was a lot of positives to it, but not looking good now.
Right. And let's go ahead and round out the discussion with a look at, a wood product one, Louisiana Pacific LPX. This is one that, for anyone that has been doing construction or anything like that, you've been watching your materials just go sky high this year with a lot of the supply chain issues and all the projects people had going on. So here we have a breakout. So is this something where maybe, again, some of these areas, the materials and things like that that were a little bit out of favor, could they be setting up and ready to go for another move?
I mean, maybe. I mean, this one had a huge run. Just going to quickly go to the weekly so people can see it.
Yeah,
An enormous
definitely
run.
get that perspective.
I mean, I think one of the things people miss is that after the coronavirus crash, yeah, growth stocks were huge, but just about everything was huge.
Right.
So that was part of it. It wasn't just growth stocks. Sure, some of them just went, amazing compared to it, but this is a huge move. Even just from here to here, and then another one. So there were some big moves. Okay, so it took a break. I mean, lumber prices came down. That's not a surprise. I think they've come back up. And the relative strength line still looks a little weak, not just from here, but it's not above, the recent short-term highs, which would be nice. On the other, oddly enough, I mean, housing plays are doing well, but oddly enough, you don't have to worry directly on COVID like with some of the retailers. And interest rates, while I'm sure they will influence Louisiana Pacific, maybe not just so immediately like a home builder or some of those, kind of plays. So, I mean, it's going to be influenced by the commodities and interest rates and some of these things. But, there's definitely an argument for this. And I think that you do have to be watching out for ways to play outside of it, so you're not too weighted in one sector or another, because especially with sector rotation seemingly coming back. Obviously, if you were all in chips and tech titans, you'd be saying, yeah, why? What do you mean? Of course I'm going to stay concentrated, but that could easily reverse and go the other way, while other sectors like this come on.
And as you mentioned earlier, it's especially important that you're watching your stocks to kind of see if they are starting to get extended above that 10-day moving average line, above that 50-day moving average line, because it's very normal for some mean reversion to happen. And if you're too far above that level, well, then where's your exit? If you're going to come all the way down to your 10-day or your 50-day after having a strong move up, that's a lot of ground to give up. So, I think it's pretty wise what you're saying, how taking a little bit off at least can help with that volatility. So with all that being said, what should investors be doing now? And I want to give you a chance to we talked about DoorDash a little bit and taking the food away. You had kind of a good analogy this morning on the junk food type thing and the divergence kind of happening.
Yeah, I guess it was, we were just talking internally about the stock market is a little bit like somebody who's just like gorged on junk food. So they're simultaneously stuffed and also malnourished. I mean, it's just a weird situation. I know that if I eat just junk food, I don't feel very good after it. And it makes it hard to interpret. A lot of stocks are struggling, but we're also extended, and it's just strange. And so with rotation going on, and if we had a pullback, I think it's not a good time really to be adding to positions for the most part. I'm not saying it can't work. And obviously, if you've got the right sector, I think it can work. But if we do have a pullback or sectors rotate out of favor, new buys are going to come out, are going to be underwater quickly.
Yeah.
And so
and that's what the weekend is for, right? To do your
Yeah.
screening, to kind of, get your battle plan up for the next week. It's going to be, we do have the Thanksgiving holiday next week, a short day on Friday. But, there's still going to be, I'm sure, plenty of action. And so get that trading plan in place over the weekend, do your screening, and also kind of draw the lines in the sand for your stocks. Where is it that you want to get out, so that you don't suffer from round trips or worse? Where are you going to take some of those profits?
Yeah, I think one other little wild card out there is that President Biden is going to be naming a Fed, his nomination for Fed chief. Now, there's a very good chance that Jerome Powell will get a second term, but it could be somebody else. Markets probably would be pretty happy and just take in stride if it's Fed Chief Powell. The other choices are probably well qualified. I don't want to make anything negative about that, but it's just, the devil, or the angel, however you want to look at it, as opposed to a new person when we're in the middle of a bond taper with inflation going up high and with markets sort of in an odd place. It's a delicate time. And I think, so that's something that could upend things. And you just have to take it. You have to see what the market reacts to it. I mean, you don't have to spend too much time thinking about it, but I think that's one little thing. And just make sure you have cast a wide net when you do your stock screens to make sure that you're watching it, maybe pick up on sectors that are starting to pick up, and
Right.
make sure that you're there and alert, because some stocks are moving. When they do move, if you do make things, they move quickly. And so you have to, like we were talking about some Bitcoin plays on IBD Live, and it's just like by the time we talk to them, it's like, well, they're already extended. I mean, it's like it's like, I mean, that's Bitcoin for you, but that happens with a lot of stocks. And so you want to be ready, with action on the way up and on the way down. You can't just be dawdling with the market right now.
Yeah, good advice. Do your homework. So thanks a lot for the insight, Ed. And that'll do it for us today. Of course, Allie will be back next week, and along with myself and Ed and Ken joining the crew again. So hope you join us for all of those. And don't forget, we also have IBD Live every morning of market action. We start 10 minutes before the open of the market, and we go a full hour at least into the market action, and a lot of insight there. You get to hear from a panel of at least 4 people with some really great special guests. We had Anne Marie on today, back on the show, and she did some great education on options trading and protecting your profits for some of these high-flying IPOs, and a lot of great stuff. So if you haven't checked that out already, make sure you take a look at investors.com/IBD Live for a free trial there. So thanks for joining us today, and we'll see you back here next week. Take care.